Good evening, all. Ira Epstein of Linn & Associates with your metal market wrap-up for this Thursday. And we are now at the 4th of March, 2021, 6 p.m. Central Time, and what a day. You know, today I've been warning you that certain things were coming about. We had the Fed chair speaking at the Wall Street Symposium, and we knew all eyes were going to be turned on to him about what's been going on in the curve yield. And then we had the OPEC meeting. So we had two events going on. OPEC, the market assumed, I'll start there, that there would be production increases. It started off that about 1 million barrels was the consensus. Between that and 1.5, maybe down to 500,000. Well, as it turns out, the market got an increase of 150,000 barrels a day. That's it. Most OPEC members doing nothing. Russia and one other country Russia gets 120,000. I think forgot which other one it was, but it's one of the eastern satellites there. It gets 20,000 a day, and then they'll revisit this in April. The market wasn't ready for that, not even remotely. So away you went up rather dramatically there. Then the Fed chair spoke, and a lot of people thought that he would offer a dovish tone to the market. Well, he offered no tone. That was my take of it. Nothing. The Fed has tools, they're in their toolbox, and they'll decide what they have to do when. As he was talking, you could just see what was going on. The dollar started moving up, the stock indices, which had rallied smartly into that, gave it all up, and then they started their decline, and you had no reprise here. Frankly, copper had already broken down once very hard. It went to that 18-day average we were talking about, so that's pretty important. Now, before I get too far, a couple of events here. Number one, in this particular set of videos that I do at the end of the day, you do realize that I have a paid subscriber area. In that is where I say, I want you to buy here. I want you to sell here. This is not what I do here. What I can only do here is tell you what I think the pros are doing. If the market goes to a certain point, how they'll act. Why? Regulations. It's that simple. So, you know, if I came out here and said, I want you to buy here, sell there, well, you'd probably visit me in a jail somewhere. You know, you're just not allowed to do it when you're a registered broker in certain things. CNBC can do it with their ways. We have to do it our way. So that's the first thing. Do I offer a free trial to it? Well, at the end of this, I do. So you can see what I'm doing, and you decide if I know what I know or if I don't know what I know. You know, it's going to be one of there. If you're watching me on YouTube, at least hit for the free subscribe. That would be appreciated so that our algorithms get to pick up, not mine, but YouTube's, and give us a better ranking. We've been at this a long time. I've been doing shows like this, so you'll know, for decades. Not a year or two, decades. Many of you know me from television. I had shows all over the country and have done that. Enough of that. Let's go to the market. When you look at gold, what can you say but the market is tanking? It's that simple. It's been under the 18-week average since November. I use a bias. In other words, I use filters in the market. That gets you a bias. When you're under the 18-week average, I'm negative. When you're over it, I'm positive in the market. It's fairly simple. But then what I do is I start adding to the charts other indicators. Okay, so let's get to them. First off, this is a regular chart, and I have been repeatedly telling you it's like a step ladder. We keep coming down the step, coming down. The swing line study, which measures that, has been making consistently lower highs, lower lows, all the way through. To break the current leg of this downtrend, you'd have to get back over 1739.10. The market's at 1690. It has given up that $2,000 level that it recently had. Wow, that's quite a break. The market is under the 18-day average, so let's stop there and take a look at what we have. We have the bias under the 18-day average as well, down. The swing line, which is a trigger for what is a trend, lower highs, lower lows, downtrend, is here, keeps measuring it to lower levels. What about the Bollinger Band? I use Bollinger Bands because what Bollinger Bands do is as they come down, they help you to figure out just where the markets are, what they might and might not do one way or the other. You're running the Bollinger Band. I pointed that out for a week to you already. And at the same time, have developed. Now let's go back here away from today. So let's go to Friday of last week. Both numbers under 20. Day before, both numbers under 20. Day before. So you had an embedded reading. Let's go back here. Not today, right? I don't want to count Thursday. I want to go here. Wednesday, Tuesday. You did not have it. I was saying last week, I was looking at the wrong days there. Both numbers not under. So the first day that you got both numbers under 20 was yesterday. Today, they're both under 20. You're not embedded. You're just in an oversold market that keeps running this number. I wish I could tell you more than that. I can't on it. In the gold-silver ratio, is this right? You're starting to get a pop here. Well, I want to move over. I'm going to move out of the March silver into the May silver. That's number one. But if you take a look, silver got hit pretty darn hard through here. It's under the lower Bollinger Band. See that number? How many times do you stay under the Bollinger Band, or what percentage of times? That's probably a better way to do it. 5% of the time you'll stay under a Bollinger Band. So you're getting excessive. The market finished out today, the first time it hit both the combination of the 100-day average and the lower band. Can it go lower? Sure, but it's oversold as can be. It's still under the band. If the market wants to fall further, a potential another target is 24.31. The market should try to get back up and over 25.57, and the longer it takes to do that, it could be a day or two, that becomes more of a resistance point in the market. But in the past, you have gotten under that number and you've played with it for a little bit. So that wouldn't surprise me. You generally don't play too long with the 200-week average. So in summation, a downtrend, which didn't start today. It's been in place in this lower high, lower low. It fought a hard battle to hold the Bollinger Band, which you'd expect it to do. Today, March 4th, thanks to Mr. Powell, what happened is he offered no support. The dollar shoots up. Everything that's trading in dollars except crude, it got itself hit, and crude had its own set of circumstances with not putting oil out on the market. Okay. In the copper market, all I was looking for, and I have said it to you repeatedly, was when you had lost the embedded reading, you being the chart, lost the embedded reading. Normally, price and the 18-day average make a run at each other. Well, you finished out today, March 4th, literally on that number. You're getting a little follow-through tonight. 600 points is a lot of follow-through, to be honest with you. 6 cents, but I wouldn't be surprised if you fight the battle right there. Has the whole game changed because of this? No. What has happened is the game went from creeping interest rates in the market, dealing with it, that now they're becoming more accepted. The market gets shook by the fact that 30-year mortgage today went over 3%. It gets shook by we're approaching 1.6 again in the 10-year note. It gets shook by all that, but what's not having the impact is the fact that 2 million Americans a day now, are getting their COVID shot. You've got to get through this phase to get to the next. Don't panic. That's the point. The market's in a transition. I've said that to you. We're in a post-COVID case. You've heard me say this now basically since the beginning of the year. A lot of traders didn't believe me about it. Well, you're there. You can see it. In the platinum, you're down to the lower Bollinger Band. So the market caved itself in with everything else. Okay, they're not going to build fewer cars. There's going to be plenty of demand for this metal. Same in the palladium market. But the dollar is strong. And the dollar wasn't supposed to be strong. That was one of the trades of the year, along with emerging markets were going to be the other trade for investors for this year. You know, that's why I gave up years ago making my December projections. I have to worry about tomorrow. What am I going to do by the end of the year? People like it, but I've learned that those things, they're more luck than anything else. Okay, so as you look at this all and you put the metals together with the strong dollar, and you can see what the dollar has done, that's the wave you're getting. Is everything either getting too oversold or overbought? Yes. So let the dust settle. You're going to get jobs data tomorrow, and you'll know where this all goes. As I started you off, I said, if you haven't tried my morning subscriber video, I'd love to give it to you along with my written commentaries. Twice a day, I put out written commentaries. Think of Reader's Digest or a synopsis that you get where you see quickly and then brief writing under it tells you what the story is. I'm not writing books. I can do so much more in a video than I can do in a book. These videos, believe me, are just a tip. What you see in my subscriber video is where I want you to go. So if you'd like a free 2-week trial to it, I'll make that available to you. All you need to do is go to our website. We'll give you everything we have from the charting software you're seeing, access to what the subscribers get for a 2-week period. Trading rules, everything else that you need to put things together. How do you get this from us? It's simple. Just go to our website under free offer, sign up for the 2-week trial, and we'll be happy to get you set up. I'm Ira Epstein. You have a great day.